Secretary of State, thank you very much indeed for navigating us through the choppy waters of international trade, because as you know, there are many contentious areas in them. And you brought up one, which I would like to put to Minister Olusegun Aganga straight away. Africa, obviously, comparative advantage very much in its agricultural products. I know you want to start doing the high-tech added value products, but as things stand, it's very important. And Vince Cable referred to the agricultural subsidy. It's about $75 billion a year that the EU gives to its agricultural sector. How much of a barrier is that, therefore, to African agricultural products into the EU?
Right, you touched on a very, very important issue, but before I come to that, let me just quickly say, I will be looking at this trade and investment from the eyes of Nigeria, from the eyes of the African community. Now, everywhere, I cannot agree more with my friend Lord Green, who said at the beginning that in times like this, when you have financial crisis in the world, you look to trade and investment to be the driver for sustainable economic growth and inclusive economic growth, which is about job creation. So we all have the same strategy. That's the only way out. And so we're competing very well for the same thing. In 7 months, I've been to at least 12 different countries. And in those countries, there are 4 common things when we talk about investment. Investors are looking for good, high returns. Investors are looking for 4 main things: raw material, access to market, a market, technology, and capital. Technology and capital you can move anywhere in the world. Raw material you cannot move. Market you cannot move. Nigeria has about 167 million people. Gateway to ECOWAS about 300 million people. By 2070, we'll be the 3rd largest nation in the world, and the average age is about 18.6 years. When you talk about commodities, Zainab talked about agriculture, so I will lead that to agriculture. We're saying this is a country that is the 7th largest producer of crude oil, has between the 8 to 10 largest reserve of gas, has about 34 different solid minerals in commercial quantity, has about 84 million hectares of land, only 40% of that cultivated. So agriculture is fundamental and critical to us. And when you're talking about trade and international trade, there are, yes, the tariff barriers, but there are the non-tariff barriers. And that comes things like labeling, like standards, like subsidies. So I come back to your point about subsidies, and those, in a way, affect the development of such African countries. But I think the world is changing and has changed, where people are looking at the fundamentals, which I did talk about earlier on. And at the end of the day, I think what we're all looking for is some level of sustainable economic growth. You deliver that through industrialization. You deliver that through trade. And I think, it's important that whilst we're looking at openness in trade, we address the shortfalls of liberal trade.
Okay, do you want to pick up that same point, Anand, Sharma, in terms of what Vince Cable had to say?
You see, we are discussing here trade and investment in a backdrop which is fairly challenging for the global economy. It's not the question of how severe the crises have been, but there has not been a steady recovery. And some regions of the world, including the Eurozone, there has not been recovery. That has impacted the global economy very adversely, whether the developed countries or the developing ones. When we are viewing this particular subject, I would like to juxtapose it to 3 fundamentals. First one, today, is the changing architecture, the multipolarity, which is referred to both by Dr. Vince Cable and Dr. Aganga. The north-south axis of capital flows now needs realignment, particularly considering the fact that 35% plus economic output of the world is coming from the developing or the emerging countries. And the projections are very clear that in the next 15 years, if not less, the emerging 7 will be equal to or will overtake the G7 economies. So therefore, the new order has to reflect, particularly the financial institutions, both the political and the economic architecture. That has to acknowledge that. Another important thing is about trade, but that trade, again, is growing, as was referred to, even after 2008-9, 20% growth. But that's not enough. When we look at what is directly impacted when there is a downturn, social costs are enormous. Job creation stops, job losses are there, and even in developed countries, the richest economy of the world, the recovery has been more or less a jobless one. So the trade, what we have seen, the growth, developing countries today have 42% share of the global trade. And the increase, when we look at the same period in which the global trade has expanded, say by 4%, the developing countries' trade has increased tenfold. And it's not that the developing countries are trading only with the developed countries or the industrialized countries. The South-South trade has registered that growth, which we have to bear in mind. The second issue is of economic globalization, particularly in the context of the technology revolution, which is moving capital, moving goods, moving information at unprecedented pace from one region to another distant region. And there now today the new value chains are being created in the world. Look at the multinationals, the way they operate. They have their production centers spread across the globe. That's the value chain I was referring to. And the intermediate goods have become important. The developed countries would be importing at least 50% of the intermediate goods. In the case of emerging economies or developing countries, it could be 3/4. So therefore, what actually a country is exporting, the value addition may be very small or may not be that substantial. I'll give you one example. If Apple, this iPhone is made, then at least out of $144, I was told, $100 would be imports from Japan, from US, and elsewhere. So 10% may be the value addition if it is made in China, that China would be doing that. And the third important fundamental in today's context would be the new order, the multilateralism. After the GATT talks were concluded successfully, the global trade is rule governed. That's through the WTO. What was required was to take it to the culmination through the completion of the Doha Development Round, which Dr. Vince Cable referred to, and I entirely agree with him. That unfortunately has not happened because of the economic crisis that hit the political appetite of the countries which have key interlocutors, particularly Europe and America. I feel that was lost, the political appetite.
Brings us to the point that, I mean, I think...
No, what was referred to here was about the new trade agreements. That is important in this context. When the multilateral process has been stalled, then America is talking of Trans-Pacific Partnership.
You have the bilateral
There are 350 such agreements in the world today. And regional economic communities are becoming a reality. Africa, there are 7 at least very vibrant regional economic communities. EU is an economic community. The process started with North America, with NAFTA. You look at South America.
And is that a good thing? We understand the trend. As you say, you have bilateral agreements.
No, the countries are doing that.
Yes.
I was coming to that because even we are doing it.
Yes. And
in the last few years.
Is it a good thing?
Of course.
Okay, that's good. I want to ask you then, Charles, Minister Aganga, Olusegun Aganga, about that, because what you do see at the moment is, because of the absence of any multilateral framework, as in conclusion of the Doha round, is that you are seeing the EU in particular as a multilateral institution in a sense, but making deals with African countries separately, what are known as the Economic Partnership Agreements, the EPAs, and I know former Governor of the Central Bank of Nigeria, Charles Soludo, has been rather critical of these. He's now an advisor, I think, to your President, Goodluck Jonathan.
Yes.
But just what is your position on that?
Now, if you look at EPA, I don't know whether most people here are familiar with the Economic Partnership Agreement, which is a partnership agreement between Europe and the RICS, the African, Caribbean, Pacific states to the regional economic communities. Now, the whole idea, the objective of EPA, I think is sound, actually, because the idea is supposed to make it WTO compliant, it's supposed to be development-oriented, and yes, it's supposed to be done on a reciprocal basis.
Yeah.
So it makes sense. It's about development, it's about poverty reduction, it's about trade, the free trade zone between the countries. However, when you're pulling down the wall and you want to have trade openness, it's critical that you address the downsides of free trade, particularly when you're looking at developing economies. So where we are today, yes, it should have been completed by 2007. There are 4 critical areas where I think Europe or UK through Europe have to show some level of flexibility and leadership. And those 4 areas, market access, in terms of, is it 80% market in terms of products, or 60% or 70%, and over how many years? Europe is saying roughly about 12 years, Africa is saying over 25 years. The second bit is about financing gap in terms of the EPA development program.
Sure.
You must understand you're dealing with a developed economy. And as Sharma said, it's a new world, a new order, new paradigm.
Okay, let's put that to Vince Cable, because I mean, you hear there that there's an argument for flexibility, particularly for the least developed countries, and WTO rules actually don't ask them to liberalise their trade anymore. But I suppose it's linked to this thought that's going around now very much, is this idea of progressive protectionism. You talked about, we need to make sure that trade barriers are down, but is there any merit in the argument for some countries, Dr. Cable, that progressive protectionism, i.e. when a country is allowed or even encouraged to rebuild and re-diversify its economy by limiting what it allows in and what funds it allows in and out as well? Is there any merit in that?
I think progressive protectionism is likely to be a contradiction in terms, mostly where it's applied. I can understand the arguments in 2 contexts. I think Mr. Aganga is quite right that you have an oil and gas-based economy, want to diversify, want to add value in the form of manufacturing, and that isn't just going to happen spontaneously. It's going to need government support in various ways. So, and I do understand that. And I can equally understand why the so-called least developed countries don't feel it's appropriate to have a totally reciprocal relationship. But there are dangers here. I mean, I started my professional life 50 years ago, working in an independent African country, developing trade policy, and Kenya. And the theme was about how we need to do our manufactures at home behind tariffs. They were very high cost. Eventually, a lot of them failed. And the weakness, of course, was the lack of a big domestic market. It's one thing in India or Brazil or China, where there is a massive home market, but if small countries are trying to protect high-cost producers, that's likely to lead to very unsatisfactory outcomes. So progressive protectionism, you call it, needs to be treated with some care.
All right, and Secretary of State, you mentioned India, obviously, which has a very large internal market, which, when it comes to trade and open trade, that India does get criticised for not being as open, some people say, as it should be. And in particular, you now are trying to open up, like the big US giant retailer, Walmart, trying to come in, and you now want to allow, don't you, people to get 51% in a joint venture Indian company.
A single issue or a single reform does not define a country's economic environment. We have a very welcoming environment for investments. India has been and remains one of the first 3 favored destinations for the global investors. At the same time, policy formulation is always an inclusive process, and we are doing it. We have made a number of changes. If you look at what India was in 1996 and where India is today, most of the sectors are under automatic route. When you look at the approvals for the foreign direct investments, those are very much there. And there's always a process which is continuous.
But
it is never frozen. We are addressing every issue, but you're right. In any country, there are the domestic environment complexities, the social and economic realities, which necessitates that you take a policy formulation forward by building a strong consensus in favor and create an instrumentality which factors in your economic and social realities. Because you cannot just take a model and put it in a country. We are a big country of 1.2 billion people. 20% of the world's children live in India. So we are looking at every dimension when it comes to investment. And I can only say one thing, that we as a government have an abiding commitment to reforms, to further liberalization. But what is equally important in the global context to remember, that we have to look at what is the scenario when it comes to sectoral opening ups. We have been much faster, and we demand the same from our other partner countries. Today we live in an era of partnerships within the countries, partnership between the countries. And how we can do that? The barriers have to be brought down. There is this threat, which is real, as Dr. Aganga also said, and Vince Cable, of protectionist barrier being erected, particularly after 2008-9, unspoken ones. And our view is that they are counterproductive. They hurt economies. Therefore, they need to be brought down. That is what India has been advocating. And that's why we are in particular concerned, so is Africa, so is South America, the entire developing world, which was looking forward to the successful conclusion of the Doha development round of the WTO to address historical imbalances and to give market access, because 4/5 of the world's agricultural force, and mind you, these are sustenance farmers. These are not big farmers, with big land holdings. These are not commercial farms. That is there in these countries. So if there is a balanced, rule-governed, fair, multilateral trade regime, that would help the global economy. There have been studies that it maybe perhaps within 2 years, it would add $1 trillion to the global trade, if not more. So we have to address all these issues. But good that you asked me about India. I hope that we are successful.
Yeah, I did. No, I was just trying to show that the difficult political, battle it is sometimes to try to. And I know the battle you're having in Parliament, but don't hold your breath on Doha over a decade. Yes.
Yeah, sorry. Yeah.
Yes, no.
If you allow me, just one quick word about India and the trend and all that. You see, the Africa's trade with the rest of the world has gone down from about 10% in 1950 to 3%. The volume of trade has gone up. The only difference, the reason why it's come down from 10 to 3% is because Africa has remained at the lower end of the value chain, exporting raw materials, exporting job opportunities. That has changed now. We want to add value and want to industrialize. No nation has moved from being a poor nation, a poor nation to a rich nation by relying entirely on exporting raw materials. It's to industrialization and the social service sector. India, by the way, has now become, if you look at the influence today, US between 2006 and 2010, US was #1 trading partner to Sub-Saharan Africa. Euro was #2. Britain or UK was actually very strong, but it's losing its traditional position, was losing its traditional position. But in the last 1 year or two, we've seen a lot of dynamism from the UK part of it. But more importantly, just this quarter, we're seeing India. India has now become the #1 trading partner for Nigeria. And I must congratulate him for that. So I think that's part of the openness.
I'm glad you're sitting together.
Yes.
You can strike up a bilateral if you like over lunch. Thank you. Very briefly, some comments probably at this stage from the floor, if there are any. No? All right. Well, we've stunned them into silence, I think, gentlemen. But just maybe a closing thought then from all of you. Pascal Lamy, the head of the World Trade Organization, has said he is very worried about increasing protectionism because of the financial crisis. I think the figure is something like 124 protectionist measures in the last 9 months alone, affecting about 3% of global trade since the financial crisis happened. Do you see that as something which is carrying on, or something which is not going to go on? Let's go in reverse order.
Okay. When there's crisis, there are opportunities. There are a lot of opportunities for the world, for all of us to increase our investment and trade and all that. But there are some challenges, and I actually chaired the last MC8 meeting in Geneva of the WTO. And yes, we did talk about Doha, but the biggest threat we identified was the protectionist measures, which we're seeing, and it has increased. G20 met in Washington in 2008 and said, guys, we have to clamp down on this. But it has increased. So it's important that we walk the talk. G20, all of us. But the other danger which we're seeing, apart from went to protectionist tendencies, it goes to non-trading barriers in terms of whether you subsidies, labeling requirements, standards. It's difficult for an African country to sell anywhere outside Africa because of the standards also. So we need to harmonize that. But the other trend which we are seeing, which are addressing, is the issue of dumping as well. You see, in Nigeria, when we came in about a year ago, the amount of imported products that are substandard was about 85% of the imported items from 1 or 2 countries. We know them, but we cannot name them here. We have brought that down to 60%. I am going to take that down to 30% and then 0. So we're seeing an increase in protectionist measures. We're seeing increase in dumping in other countries. And those things we have to address.
You're going to take a leaf out of the EU's book because it showed that the single market did increase intra-continental trade. African Central Bank, African single currency.
Yeah, we're moving toward that. The trade within Africa is roughly about 11%.
It's about 10%.
Okay?
Yeah, very low.
Trade within ECOWAS is 10%. Now, our strategy is about regional economic integration, which means that there's a lot of opportunity to increase that from 10 to 50. That is formal trade. 90% of that is informal. So that is one of the areas we're focused on. So it's not just about international trade, it's about regional economic integration.
Minister Sharma.
I entirely agree with them. And that's what we are seeking to do. You engage with the entire globe. We have also had our engagement prior times with our traditional partners, which remain very important for us, like the United Kingdom, America, Japan, and the European Union. But at the same time, we have, last few years, made a focused effort. We're going in for diversification, intensifying our engagement with Africa. When you look at both the trade and investments, value addition, job creation, that's what the Indian industry and investments are doing. Same with the South Americas. But we have entered into understandings bilaterally, but also with the regional economic communities. We signed an agreement with ASEAN, that was 2009 August. Back to back, we had done a week before with South Korea. We signed a comprehensive economic partnership agreement with Japan. We are negotiating with EU. We signed with Malaysia. We are negotiating with Indonesia, again a major economy. So at the same time, what I would like to caution, that while we are keen to take to an early conclusion these important agreements which we are negotiating with the EU, with Canada, with many other countries, that this must not be seen as bypassing the multilateral process. That's the WTO. That remains the first priority because that is the only platform which can address the global issues and ensure the degree of comfort which the developing and the LDC countries do need. And I would therefore be urging that we should be looking at trade facilitation, as Dr. Vince Cable said, at the WTO, but also a comprehensive LDC package to begin with, but not dilute our commitment to conclude this as a single undertaking, both agriculture, NAMA, and services.
Thank you. And Vince Cable, of course, I think trade between India and the UK has increased something like 44% in the last year, hasn't it?
That's true.
Yes,
so
it's both sides, and it's
both sides,
very beneficial. I just have 2 points that arise from what my 2 colleagues have said. I think the first is recognizing the way in which the center of the gravity of the world economy has changed very, very dramatically. And, you know, and if you have countries like China that are growing at 10%, India almost, and now in the last few years, Africa, probably the most dynamic economies in the world. Compound growth is a very powerful factor. And it does mean that the concentration of markets and economies is now shifting very radically. And that also must influence the way in which we negotiate about trade matters. 20 years ago, at the end of the last round of negotiations, the common practice was the European Union strikes a deal with the Americans, consults the Japanese, and everybody else accepts it on a take it or leave it basis. And that, you can't just operate the world like that anymore. It's an era that's gone. Things have to be agreed and understood in advance by all the major players. And unless we do that, we're not actually going to make any progress in strengthening the global system. I think the second point I would make is the danger as well as the benefits associated with all of these deals that are striking up, regional, bilateral. I mean, they are positive, they are a second best to nationalism, but there is a danger of fragmentation. And I think Mr. Sharma's comments at the end are absolutely crucial, that we shouldn't lose sight of the fact that these limited regional bilateral agreements have to be subject to some overall multilateral global discipline, because otherwise we will drift back into the kind of very fragmented world which we had before the war, and with such disastrous consequences.
Secretary of State Vince Cable, Minister Anand Sharma and Minister Olusegun Aganga. Gentlemen, thank you all very much indeed. Thank you all for your attention. Thank you very much. So sorry about